It's 4 a.m. in the UK here on Wednesday, 14th of October. I'm up early to try and figure out what's going on with these markets. It's been a difficult few days. Right, this is a monthly chart of the US dollar index, which you will remember from last week. And I talked about how we could dip as far as this big support level, a retest down here, sort of around the 9200 area. Perhaps what is happening is that already the buyers are back in. We've dipped back about halfway through this big bullish candle. And maybe this is where the buyers decided they were going to come in. They weren't going to wait for a dip down here. This is all I can find to explain the pretty severe and swift moves yesterday. I can't see any fundamental or reason or news that came out that suddenly caused the dollar to absolutely rocket. But it did. And even more confusing because obviously on Friday, when we'd broken below some quite important levels, this indicated to me that there would be some further losses. We then got the doji on Monday, sort of indicating indecision in the dollar index. We've got a little bit oversold, but nothing severe. And then just a massive blue candle on Tuesday to completely reverse that move on Friday. This to me is very confusing, especially as it is around the trend line and 55-day moving average. Both these moves appear to be on nothing really. So I have to say, fooled me. Don't really give me any direction either. I mean, we could easily just reverse that move today, judging by the way markets have been so erratic. I mean, even here, even when we were going down here, we were up one day, down the next, up one day, down the next. It's very erratic and becoming more volatile within that sort of erratic sideways trend. So it's pretty dangerous at the moment, I think. No indication for longer term direction other than that monthly chart that I showed you. If I'm right, then we are about to resume the bull trend in the dollar index, which I do see as the most likely trend in the future because of what I've just shown you, because of the fact that we bounced off this 9-year trend line, 100-month moving average, and 38.2% fib down here at around 9200. All very, very significant. So longer term, as you already know, I am feeling bullish of the dollar. I just thought we'd have a deeper correction, but maybe that's not the case. This is the Aussie versus the US dollar. As you can see, we held this trend line. I had this as a sell level on the Aussie report, but I didn't focus on it in our chat room, and I wish I had now, of course, because we have reversed, although I was thinking after this big blue candle on Friday that this might mean that we're going to see some positive follow through on Monday, and we just didn't. So, in effect, we're in a sideways trend. I guess it all depends on whether we hold this trend line, whether we go lower. So, in the Aussie dollar, I'd be watching around the 72.10, 72.20 area, and I'd also be watching around the 71.00, 70.90 area. I'd watch for a breakout of either of those. Break below the 100-day moving average signals further losses, of course. So, yeah, those are the two areas I'll be looking at today. When you look at the weekly chart for the New Zealand dollar, it would appear that we're just ranging in between the 100-week moving average, which is at around 65.30, 65.20, up to the 200-week moving average, which is around 67.70, 67.80. Maybe write those down on a bit of paper, just to keep your eye on them. There's nothing else from the weekly chart. In fact, most of these trend lines are not even relevant anymore. But we'll leave them on just to see what happens. Yesterday we did not get a big push in the US dollar against the New Zealand dollar. The New Zealand dollar held its own. What does that mean? Really don't know. This is very much just a sideways trend. I guess what's key is that we are holding the 100-day moving average, so keep an eye out for that at 65.80, 65.70. This could still be a head and shoulders pattern. This could be the right shoulder, double top of the head. Left shoulder. This could be the right shoulder. We won't know until we break the neckline, which is around 65.30, 65.20, and that is coupled with the 500-day moving average around there, so it is a very good support level. As I said, first of all, we have the 100-day moving average, which has definitely done a good job on the last two tests, so watch that too. Those are the levels I'll be watching. Direction-wise, I really have no clue. This is just not giving me any indication whatsoever. Dollar yen, based on this trend line that goes back to the beginning of July, so it's just over 3 months old. Based on this, our rejection of this trend line, it looks like the dollar yen will go lower. Yesterday we bounced up as far as 105.62. I had a sell level at 107.65, 107.75 with the stop above 105.85, I think it was. We didn't quite get there, unfortunately. If you're still short from up here, then I think you're going to be okay. I think eventually we will turn lower, and I would be selling it on any bounce again to sort of the 105.70, 80 area. Euro yen, your guess is as good as mine. I don't know what to make of that pattern, and the weekly chart is just a big bag of confusion as far as I'm concerned. The weekly chart for the euro is nowhere near as clear as I think the dollar index chart is. Other than that, it's quite possible we're in this massive downward channel, in which case we rejected it and we look like we could continue lower. In that, obviously, this big red candle indicated that that would be the case, and then these two massive blue candles were sort of sow some confusion and indicate that we're in a sideways trend on the weekly chart. When we look at the daily chart, I don't see any clear pattern at all. I don't know what to call this. I don't think this is a bull flag, a bear flag, because we're just not in a significant enough bear trend. We're clearly in something sideways. I don't know why these levels are holding. I don't really know why we bounced off there. So I can't really make any sense of this at all. And this is just crazy. I've gone on and on about this a few times, but look, up, down, up, down, up, down, up, down, up, down. And then massive up on Friday, massive down on Wednesday. I really probably should just leave this pair alone because it's erratic, it's random, yet it's becoming more volatile with no clear pattern and no clear trend. Okay, Canadian dollar, dollar Canadian. Weekly chart, no clue. Doesn't indicate anything. Moving averages are just going sideways now because we have been trading sideways for so long. Apart from this massive jump that we saw when the dollar benefited from the whole COVID thing. No pattern here at all. Just going sideways. Obviously, in the back of my mind, I've got a potential strengthening US dollar, meaning this could go higher. But if I was just to look at this chart on its own, there's no clue what to do. This doesn't help me here much at all. I'm just going to have to leave this one. Really going to have to sit out. I think I've got to sit on I feel compelled to find some trades because that's what my job is and that's what I'm supposed to do for you. But I think also I've got to remember that my job is also to sit on my hands and do nothing when the signals are not there, because when I do get good signals, we do make really good money. Right, gold, I have to admit, has been appalling. I haven't read this well at all in the last few days. Well, anyway, there's no point in recapping the trades. All I can tell you is, well, this trend line is not particularly relevant anymore. There's nothing really for me to go by. I don't know what this is. Very much a sort of random pattern. Again, I don't think that's a bear flag. We do seem to have periods when we go sideways a lot in gold, like this one here. Massive sideways pattern here through early summer, early summer. And even when we started to go up, it was a very difficult rally. It was only really this period where you would have made any significant money being long. It would have been difficult to be long here, especially if you had a trailing stop. So I guess that's just the nature of gold, and maybe we are now in a sideways period. I think I'm just going to have to wait and see where if we test the 100-day moving average, because that has been fairly reliable, certainly in the recent past. This is a 55-day moving average. Seems to be doing its job. Obviously there is congestion. You see all these little tails down here, these candlewick tails. So, but we got through that. So this is why I just thought we probably could go higher, and then suddenly we just reverse and wipe out all of Friday's gain. I don't know what else to say about this really. I'll show you what's really confusing. When you look at the shorter term chart, the hourly chart, there we go. So I thought I'd figured something out yesterday. I thought I'd figured out that we're in this channel and maybe we should be trading that. I actually did trade this, and I didn't put it in the chat room because I just thought I've made such a mess of gold lately and it hasn't made any sense at all. You know, this area here really should have offered some support. We just sailed straight through it. So I saw this trend line, and as I put in the chat room in the evening, this could be actually building a base, and we could start to benefit from that, and we could start to turn around. Anyway, I wasn't sure. I'm glad I didn't put the trade in, because for some strange reason in the middle of the night, 2 a.m, we've just spiked down, taken out all the long positions, got down to, where did it get to? 1882. Nothing really else down there. You know, I mean, okay, a bit of price action, and there is a fib down there, but not really enough. Once you've broken this, I would have thought there would have been some shorts coming in. And now we've just rocketed straight up again. So even if you had bought on the trend line, there's no way you would have held that, you know, when we've just dropped another almost 10 points. So I just think this shows the quite erratic nature of gold at the moment, and maybe it's one to sit out. Having looked at this chart, it probably does look like we will start to go higher. All the longs have been taken out, and now we're going to probably push up to this area. Ordinarily, I'd say that this might hold, but it's not even worth trying a short there. That's just way too risky. We shorted oil up here last week. It was tough to hold that position. We didn't come down particularly quickly. It wasn't until sort of Sunday night that oil really followed through on the downside. Now this is confusing because we recovered all of Monday's losses on Tuesday, which I didn't expect. The 100-day moving average hasn't really been much of a factor, so it appears to be now. But anyway, the 100-day moving average and the 200-day moving average are closing on each other. Again, no pattern to really understand, and even this series of candles over the last 5 days doesn't tell me anything. 5 or 6 days. So, yeah, I just can't make any sense of it, really. DAX also in very much a sideways pattern. Bearish engulfing candle yesterday was certainly a surprise because we had been climbing steadily as I had expected. It's still possible that this is a head and shoulders pattern. If that proves to be the peak, then there is an opportunity for bears to take us down to the neckline and then break the neckline. But that's a long way off. That's 700 points away, that neckline. So there's no way we can sell it now. Speculating on the formation of a head and shoulders pattern, that would be foolish. So that's just something to watch for the future. In the short term, we do have good support from this trend line. Remember that break above that very good resistance level I had at 12,930, 12,960 that held so well and offered some real good profits from scalping that level. Right, we're through that now, and we've now retested it. We got as far as 12,940. So with these long lower wicks, we're now 12,960, 12,930 held, bounced off. If we can just get up through the 100-hour moving average, which is around 13.26 at the moment as I speak to you, then this looks pretty good. So at the moment we are long. Well, I'm long. You're probably long too because that was our buy zone. Let's see if we can get up sort of through 13.50, and then I see no reason why we then can't retest 13.150, 13.160. Probably take some profit up there because there is a little trend line, and I don't trust these markets at the moment. They seem to reverse on nothing. So I would be more than happy with 150 to 200 ticks on that trade for sure. What was the peak? 13.163. Okay, that's not actually a bearish engulfing candle because we didn't get a new high yesterday. But it certainly does add to the confusion. Up one day down, up one day down. So maybe we go up, and then, yeah, as I say, we should probably just take profit on this really quickly because God knows what could happen next. Okay, that's it. Unfortunately, it is quite a confused video message, but I at least want to try to explain to you what I see from my perspective.